Turning to Canada, you can see from this chart, Canada has actually contracted less than most other developed countries, so the recession here has been a lot more mild. If you compare our employment market to the US, we lost less jobs and we start to gain jobs quicker, so the job market is actually a lot better in Canada. What concerns us in Canada is this chart, and it was sort of, we alluded to it earlier on. It's showing household debt as a percent of disposable income. You can see in the US, it started to turn down. It's right now about 120%. In the 1990s, it was around 90% of GDP, but at least it's going in the right direction as consumers are starting to deleverage, and you're getting that deleveraging in the US. In Canada, you can see that blue line is continuing to move up. Now, why is that? Well, because like China, I think we have a bit of a housing bubble developing in Canada. The average home in Canada is around $340,000. That's 5 times the average after-tax income of an average Canadian, versus a long-term average of about 3 3/4. So this is a bit of a problem. Is this a bubble that's waiting to burst? Well, the federal government doesn't agree that it's a bubble, but despite that, they have implemented a number of changes to the mortgage rules. Specifically, if you want to get a mortgage, you have to qualify for a 5-year fixed loan, even if you're going to have a variable mortgage. Go back, sorry. And if you're refinancing, you have to have 90%, you have to have 10% down. And if you're buying a non-owner occupied home, you need to put 20% down. So even though they don't think it's a housing market, like China, they start to rein in that growth. What happens if the housing market in Canada keeps going up? The next step will be higher interest rates. And again, as we said at the beginning, we think that's probably going to happen this spring. It probably already should have happened, like Australia has raised 3 times so far this year. Probably should have happened if it wasn't for the fact that the government's worried about the Canadian dollar moving up too high. So to sum it up, we agree with these 2 gentlemen walking around the corner there. We don't think this is the end of the world. But we do think that the financial crisis and deleveraging is going to lead to slower economic growth over a long period of time. We don't think that you're going to have a sharp recovery. And the main reason is that you go through a time period where you're spending too much money, you have to go through a time period where you're going to try and reverse that. There's no easy solution. You can't fix a problem of spending too much money by spending more money. You've got to go through that adjustment period, and I think that's where we're going to go through in the next little while. Inflation versus deflation, it really depends. It's, I think, a political decision. It depends on the amount of government stimulus we're going to see in the next little while. For Canada, we think we are better off than most countries. We think the Canadian markets are a great place to be investing money, but we'd like to see that deleveraging start in Canada, just like it has in the rest of the world. We don't want to see a housing bubble happen in Canada, and only to see it burst and have the same kind of financial crisis that we've seen in the US. Overall, in this environment, cash flow, diversification, we think these are still very good investment strategies going forward, and I know John has more slides on this. So at that, I'll pass it over to John.